And I'm like,
Hey, where's Katie? I've been quarantined.
no.
I'm feeling in today.
Oh, really?
I didn't hear.
Appreciate it.
Yeah. You, the other one.
Hey, everyone.
Hello, Eric. What's up, Eric?
I think I'll just jump in and see if anybody joins, whatever. Thanks for being here. I thought I'd start just by introducing myself. I think I've met a lot of you guys, but I at least introduce myself professionally. So it's Eric with Supreme Lending. I've been in mortgage for 15, this is my 15th year doing it. I started in a call center type environment, working for a big bank on that. So I learned the business through just talking to a bunch of people. Says a lot about the bank. The training I got was nothing about mortgage. It was more about filling out an application and just putting it through the system. On that, so I had to figure everything out as we went. So that's where the nice thing about the call center was. I learned through that, through listening to other people as well, because we were just in a cube farm on that. Then I got out on the street, built a relationship with various real estate agents and different partners, that type of thing. I've run a region for a small, well, I guess a mid-sized bank. I'm back to originating now here, working with folks like yourselves. So that's really kind of the two things that it combines two of the things that I really enjoy, right? I enjoy business, which is working with you folks that are building your business, doing that type of thing, and then working with the clients individually, helping them put a puzzle of financing together on that. Obviously, people don't reach out to me to talk about their dream mortgage situation, and they probably won't reach out to me to talk about a dream budget or you. It might make a good social media post, I think, on that, hopefully. But I think it's an opportunity for you guys to transition those prospects that come in and turn them into clients. You're showing your value because if you're talking about budgeting, it touches a lot of different aspects, but it helps you kind of create or make that dream of home ownership or whatever that might be a reality. So it moves you from, just conduit to getting to see that house that they saw on Zillow, to making that a reality and what that's going to be like. So that was kind of the hope of this, and we'll talk about that. So budgeting on that end is hugely important. Doesn't get talked about a lot. It's relatively basic when you go through it on there, but it's kind of interesting. It doesn't matter income wise. A lot of people are living paycheck to paycheck, and it's because they haven't paid attention to their budget, right? On that end, I read something beginning of the year. Consumer debt is at the highest level it's been since 2008 on that. So y'all remember 2008, right? There's a big recession on that. We're at that point. I think it's something like $2.6 trillion in consumer debt that is non-mortgage on that. A trillion of that is credit card debt, right? And that's, yeah, exactly. It's because people aren't managing their budget, right? On that end. So it's kind of that, and it doesn't matter how much you make. I've seen it kind of grows with everything. People will spend to what they have if they're not paying attention to it on that end. So it's kind of one of those situations like when you're losing weight or you're getting in shape, right? It's hard to out-train a bad diet. In this environment, you can't out-earn a bad budget on that end. So the idea is, let's talk about that and give you guys some nuggets that you can pass along to your clients as you're working through there. We can go through there, something to point out, that type of thing. Like I said, it's pretty basic on that end, but the key is you can kind of help guide folks doing that. So I'll set the agenda, the next slide there, Lydia. So I want to talk about budget in the context of lending on that end. So start with the kind of the three standards or three pillars of financing, mortgage financing, that is. The three C's: credit, capacity, and cash on that. So it's something I talk to first-time homebuyers about specifically, but a little secret, I treat everybody I talk to as a first-time homebuyer, because reality is, on average, people buy or sell real estate or do a refinance every 5 to 7 years, or at least that used to be that way. It might be longer now. So I always think it's kind of ridiculous of me to expect them to remember what that was like, right? If I do something once every 5 years, I'm not going to remember it. I mean, I have to change my password every 90 days and I can't remember what I need to do every time I do that. So pretty silly on that. So I treat everybody that way. Obviously don't talk down to anybody on it, but I just treat everybody the same way on that and give them that. Let them know, stupid questions, ask them multiple times, that type of thing. But so we'll start with that, the three C's of that, and then move into kind of the budgeting 101, I guess, if you would, just the basics of it, some things like I said, you can talk about with folks. And then move into how that budget actually correlates to those 3 standards of lending. You'll see as we go through it how it makes sense there. And then what that impact is, right? On goals, what they're trying to accomplish, that type of thing. And then just go in what a lender actually cares about versus what a budget is. So like budget, I think of as more real life. What I deal with is lending. It isn't necessarily always logical, right? But we'll talk about that there. And then obviously I left some time for questions at the end. Hopefully we'll interact as we go through too on that, or hold the questions till the end. I don't care. You can butt in whenever. And then there we go. A thing to note before we get too far into it. Would love to get to know all of you guys. I think I've had meetings with a lot of you. We are hosting a Leap Day party with Paul Gilman tomorrow night, Leap Day. So real life is for March. We'll put it on the Facebook and we'll send it out. Would love to see y'all to come. Good time. Wear blue and gold like Paul on that. So I just wanted to mention that on that. So without further ado, let's jump into the next screen there. So the 3 C's, like I mentioned, 3 C's that I focus on. There's a few more, but these are the crucial ones to figure out, and I think everybody needs to go through that. So the first one is credit. Really, the way I explain it to folks is it's a numerical representation of how people manage money, right? So that's basically what it is. It's how all of lending is really, if we give you money, are you likely to give it back to us? That's really what lending is. Credit is one of those things when you don't know the person, right? The numerical score that tells them there's an algorithm that they go through, just really going over your history of it. When you think about it, there's ways that we can tweak it. There's a few different things. I'll go into a little more detail of that on there. There's really 5 big parts of credit that we'll go through. We'll figure it out that way. But that's the key. I just explain it that way. It's all about history, right? Building up positive payment history, paying on time, managing your debt, make sure you pay people back. The next C is that capacity. It's what can you afford, right? What can you, based on your income, what can you afford for a payment? Based on the other debts that you have in your life, right? That's really where that capacity comes into. Let's see. And then the third one is just cash. It's what you have available for the transaction. Closing costs, down payment, in some cases reserves on that. We can go into those details there, but it's really as simple as what do you have available for that? So that's the 3 things that I talk in every conversation with a client. We go through that. I use their information to fill it in with them. I'll talk to them about what do they think their credit is, right? Oftentimes people have an idea what their credit is. I tell people too, they'll know, if your credit's good or bad, right? You may not know your score, but if you don't pay your bills, right? That's pretty much the key there, right? And people know that. They may not know the exact score, but on the other side too,
Go finish that thought.
No, I was gonna say, the other time they'll say, yeah, I got this through Credit Karma or through my bank or Experian, that type of thing. Something I always point out to people on that, the credit bureaus have kind of figured out that they needed different ways, different things that they could sell to make money, right? So they have different types of credit algorithms and different reports and different scoring systems based on the type of credit that you're going to get. And the way I look at it is the easier it is to get the credit, the higher score it's going to be, the easier the algorithm is. To the other end, right? If you're going to get a mortgage, it's a little more difficult. I'll explain it like with a credit card, they'll give anybody a credit card, right? They'll just charge you even me, I got a credit card. They'll just charge you higher interest, right? With an auto loan, pretty easy to get an auto loan because if you stop paying, they just take your car back, That's all. They just take it back and they'll sell it to somebody else, right? On the other side with the mortgage, there's a lot of laws that protect people. So once we give the money to them, we can't come and take the house back unless you really stop making that payment. So it's kind of, that's the way I explain it to folks, is it's a little kind of that horizon, right? On that Credit Karma, the banks, TransUnion, all those people that'll give you access to it, they're trying to sell them credit. That's what that is. That's why that score is a little bit higher. So I always explain that and say, you know what, they give good advice on how to manage credit, but that score that you see when we actually review it might be a little bit lower. And there's things that we can do to improve it, but it's something just to note, like, okay, use the advice. The score is superfluous, really. Chris?
Yeah, no, I was gonna talk about that. So it's like, my Wells Fargo credit score that they give me is probably different than when I go to apply for a mortgage.
It is, yeah, definitely. And the way it really works is the higher that score is, the more closely related it is to your actual mortgage score. If it's on the lower end, that's where they're kind of fudging with it a little bit.
How do you improve credit scores?
I was gonna go into that later.
Oh.
Yeah, I'm gonna- We can-
Softball.
Yeah, I know, like, and he just, I should have given the presentation before. We would have been in line, but no, that's all right. There are a couple ways I'll go into it, actually.
Oh, I can't.
Really good question.
Yeah, very eager, very eager.
A couple of the easiest ways, honestly, is we'll tweak your debt utilization. So paying down a credit card to 30% of what the line on that will oftentimes improve the credit score. Sometimes I've seen it where you even open a credit card, that'll improve score. If you have no score whatsoever, it's usually 6 months or so of getting a couple credit cards will build a score on that end. Although we do have options for people who don't have credit at all. We're doing one right now. The person has no credit. They paid everything in cash. So yeah, I know it sounds great on paper to pay everything in cash, but don't do that. All right. So that's kind of the three. Any questions on that? Wendy?
So my son's one of those responsible people that lives like within his limits, but he
Yeah.
had no credit. But he was told that if he got his name like on my card, he would be then attributed my credit. So we added him to my card. He doesn't have a card, he doesn't use it, but it did attribute him then.
Yeah. It helps them build credit for
Yes,
sure.
builds
You can
him.
authorize.
So we get him to 2 cards and that went a long way in his case.
Yeah, it's another sneaky way to do it, definitely. Another way to do that is, if somebody can't add you as an authorized user, they can go to a bank or a credit union. They have secure credit cards that you can get. What that is, basically, you take a lump sum and you give it to them. They put it in like a CD and they offer you a credit card with that same limit, maybe $500, and they'll give you a limit of 250. And you use it and they start reporting that to credit every month. And that's how you build it. So it's secured. So they have if you go over the 250, they just keep the money, right? So that's what that is. So that's another way to do it.
Real quick, so like the authorized user thing though, too, I have seen it where Fannie Mae's gotten smart though, and it'll be like, hey, this score is, 700, right, or 720, but it's only authorized users, like they will like strip it too, right? So I would recommend doing what Eric's saying
Yeah,
as
so
well.
it's a good way to start.
Great way to
with
build it, but you get something else
I
too.
think it's a stepping stone too,
Yes,
like that
big
authorized.
time,
I would
yeah.
suggest your son go and get a card as well and just use it, even if that's it again, further in the presentation, I was gonna mention this. That's fine, I'll go with that. But I think, live
All
within your
his
means,
cue
pay it
cards are
off,
gonna
but
be
use
banked,
credit.
mad.
The world we live in right now is based off credit. Everything you do, insurance, auto loans, everything, right, is based on this credit score that is ridiculous that they don't tell us what they're actually looking at. But we figured it out, some of it. But it is utilizing credit. They want you to use credit. So even if you pay it off every month, that's what I tell people when they're building credit. They use it, go to the groceries, go get gas, pay it off every month, build your credit over time that way. So that's one way to build that. Other questions, thoughts?
What did you call that last one? A secured?
A secured credit line. Yeah, credit card. I think you have to be 18. I think you can be added to a credit card at 16, I believe, maybe even 15. On that, but I think to get your own credit, you have to be 18 on that. And a lot of the banks and places will have different names for it, but that's essentially what it is a secured credit card. They'll call it like a credit builder program or, whatever. They're marketing it different ways, but I found credit unions, some small banks will do that. Local banks will be good for that type of thing. So.
And do people, certain rentals will report your scores to the credit union, but not all.
Oftentimes you have to ask them to. So, you can do, I think the larger like property management companies will have a process to do it, right? If you're renting from somebody that owns a couple properties or one property, chances are they don't know how to do it. But if they are renting from a property management company, they'll do it. Another way to do that is utilities. You can have utilities reported, your payment history on that. When we go into no score situations, we get what's called non-traditional credit, and that is a verification of rent over 12 months that they paid it on time. So we can have them fill that out. We can get a utility bill and show that they paid that. So there's ways to do lending that without scores, right? But that's like a short-term fix, I guess. The best way is to build that history over time, right? So ideally, it's like planting a tree. You did it 20 years ago, but the next best time to do it is today, right? So start building that credit going forward.
There are some programs too that you can use to basically self-report your rent.
Okay.
So you're not, so you don't have to have, you know,
Somebody, yeah,
one of those large property management companies, if it's just a mom and pop landlord.
you can do it yourself.
Yeah, there's ways to track that using your bank account or, you know, cash checks or.
I haven't seen it. Yeah, that would be good to know. I didn't know how that impacts the actual credit score. I'll look into that. Awesome. All right, next we're just kind of go into like the budget, budgeting itself. Oh, yeah, there's a QR code. So what that is just gonna lead you to a really basic income worksheet that you can use if you want to, like a physical thing on there. This is just kind of a guide, obviously, for that. What I would say is create a template. They can create a template on Excel by going through their bank account and their credit card statements and get an idea of what you're doing. I'll talk about that in expenses. Income is usually the easiest for people. They know what they're earning, right? So it's anything, when you talk about that income, it's just anything that you're recurring income on that. So you got your salary, you got your hourly wage, even side hustles, right? Anything that they're getting, annuity income, investment income, depending on who you're talking to, right? It's something that hits their bank account that's what I would use when they fill that out. Like I said, that's usually the easiest part for people to understand because people know what they're getting paid. It's when you get into expenses, it's a little more dubious, a little more tedious, a little scary because people don't know what they're spending, maybe don't want to know what they're spending. I know there's months that I feel that way, for sure. So, honestly, yeah. So with that, just for budgeting standpoint, everything you make, put it in there, top line, right? That's your revenue. That's your information that's coming in that way. The next thing, like I said, is expenses. It takes some doing. The suggestions, I work with a couple financial advisors who really push this aspect of it. They see it as a foundation, right, of being able to do whatever you want to do. And hopefully we'll show that that's the impacts of it as we go forward. But it grab 12 months of statements. Tell your clients to grab 12 months of their bank account. Most people, if they are paying cash, right, some of them are going to come out there. Ideally, most of the things you're paying via credit. So grab your credit card statements and build that up. On that end, get it really tedious action of that and really just go granularly on that to figure it out. Because that's where you're going to find those kind of sneakier ones that you pay once a year or twice a year, like car insurance. Or for me, something that I thought of is like get sports activity fees, that type of thing. As they get older, they get a lot more expensive, right? So it can be all of a sudden you're dropping $1,000 that you weren't expecting, right? Because a kid's going to play hoops or baseball or whatever, right? The other thing too, activities, right? My kid is a snowboarder. Turns out he keeps growing on that. He grew 4 inches since November. Yeah, I was like I was at the doctor yesterday with him, and she's like 4 inches since November. I'm like, you got your facts right. That's not possible. On that, but that meant all new snowboarding gear, which he really got to use a lot this year. But that's another thing for folks to remember. Like those are those little things that pop up that can make a huge dent in your budget if you're not prepared for it, right? So it's just little things that you can point out as they're filling that out. Like, you know, what does your kid do? Also, you're getting to know your clients or your prospects. You're learning their kid plays hoops, they play basketball, he's a snowboarder, he's whatever, right? Those are little things that you can add to your professionalism as you're following up folks, asking questions, and building a relationship. on that. Let's see. So expenses really are kind of just broken down, right? Housing, non-housing, what do I always look at fixed versus variable, right? Your fixed costs or hopefully your housing, you have a mortgage, you know what your payment is every month. That type of thing, variable, what you spend when you go out to eat or clothing or whatever. Those are the kind of things that can adjust, is identifying that. Or even you can talk about non-discretionary versus discretionary, right? Things you have to have, the hierarchy of needs, right? You gotta have clothing, you gotta have shelter, you gotta have food. You may not need coffee, you may not, you know what I mean? Like those little things some people do, right? I know, I'm talking out of turn there. Well, and I love those too. You see them online about, if you just cut out Starbucks, you're gonna save X amount and you'll buy that new house, right? Well, that's BS, right? But at the same point, that can add up, right? If you're spending $10 a day, $5, $7 a week, like, holy cow, at the end of the year, that's a lot. No judgment, do that. It's your money, but just be aware of it, right? I'm not judging anyone here at all, but because I spend money on random stuff too, right?
I feel judged.
Well, I'm judging you.
Yeah.
But going out to eat, that type of thing, like knowledge, right? Knowledge is power. Like G.I. Joe said it, right? So knowledge is power. So yeah, no, for real. So it's just understanding.
Yeah,
Really,
it is half the battle.
that QR code leads to a G.I. Joe episode. So yeah. But that's what I would say. Is I'm just trying to think of other things I do. The key to encourage the people is just start doing it, right? Take that, grab it, put it together, go back 12 months, see those sneaky things that pop up, see the recurring expenses that pop up, track it. Doing it once is better than never doing it, right? Doing it consistently is the best that we can do. Also thinking about folks like ourselves in here that might have variable income, really going back and getting a good handle on what your expenses are. That way you can start to build that cushion in the good months so that you're not worried in the less than good months, right? That's key there. So I know it can save a lot of people, and I've seen some other people that are struggling, right, in the last years that we've had on that. So it's key. I know it's a reminder for me to do that too, is just go back and really get a great idea of what our expenses are. And then that way, not feel like we have to have every deal. We don't want to be desperate when we're out there. Let's see, any other thoughts, questions about this or ideas?
I have a previous question about the credit, I guess.
Yeah.
I've heard too of people being like, oh, well, if you pay your credit card off like 3 times a month, that will help you jump it up. Is that really a thing?
No, I think what that is like.
I can't really budget because I'm like, how much did I buy?
Right, exactly. No, what happens is they only report once a month, essentially, once a term on that. And that's where credit cards are sneaky. They all do it at different times too. So you can never really time it so you have it. What they usually say is, if you're trying to improve your score, keep it between 10% to 30% of the line that you have, right? So for easy money, you got $1,000 limit, don't carry over a balance of more than 300, keep it, ideally at about 100 and carry it over versus even paying it off, right? So you don't want to pay it off because they want you to utilize it. They want to charge you some interest, honestly, and they tick up your score that way. If you're not really trying to improve your score, the best thing is just pay it off every month, once a month. You don't have to do it multiple times. My fiance does that too. She writes it like I'm like, if that makes you feel better, that's cool, but it doesn't help your
If
score.
you have a remaining balance, sometimes that helps your credit score.
No, it's crazy. Yeah, it does. So they want you to use it. I know it doesn't, but that's where they keep the algorithm a little secret and they're messing with you. But that's
Seen where
what.
like add $5 to
Yep.
a car.
Oftentimes we'll do an analysis of this thing and they'll say, pay this down to $14, right? And then get a letter showing that, and then we'll submit it back to the credit bureau and that boosts the score. But if you pay it off, that might be different than leaving it at $14. It's dumb, but it's what they do. Yeah. So that's one of the things we do. We do that every time we review somebody's credit is we'll look at ways that we can improve it if it helps the terms of the mortgage, right? I'll always weigh it out. What does that cost versus what are you going to benefit from it? And see which way it goes that way. So that way we can at least advise on that so people know what's going on.
Like the bureaus will actually tell us exactly, like, the score plus analyzers, like that's something that we have on every credit pull. And be like, hey, You can pop it to 720 if you do these things, right? So we're not just guessing, there's an algorithm that's saying like,
It used to be a guess.
used to be a,
Based off
yeah,
history.
I
We'd
like
be
the guessing
"I'm gonna
game.
pay
That
that
was
one
more
down,
fun,
see what
right?
happens.
Yeah.
That might be cool. We'll re-pull it in a couple months.
So in other words, it's really $100. I'm talking about my kids.
Yeah.
$100 and that will expedite things.
$100 for, I'm sorry, I didn't.
Each month.
Oh,
Leaving
easy.
it.
Oh,
Leaving it
leave
up.
a balance on it. Yeah, that can help on that one. I mean, unless they're trying to access credit like right now, just use it, pay it off. use it, pay it
Yeah.
off. Like the positive payment history is gonna outweigh any of that like nuanced stuff. It's really if like you're gonna buy a home next month and we need to get your score from 600 to 660. Okay, this is some stuff we gotta do right now in the short term to help it. Long term, just build positive payment history. That's the biggest thing in having credit and using it. That would be the biggest thing that I think is the most.
That's what I got. My daughter was in that
Okay. Yeah, does she want to buy a house?
right now.
Awesome. A little more difficult.
Yeah.
Depending on which part of New York. Really inexpensive places in Buffalo.
Yeah.
If you're interested in Buffalo.
Buffalo.
Niagara Falls, actually, Niagara Falls.
Niagara Falls was beautiful this time of year.
Yeah.
Other thoughts,
Niagara Falls.
questions about anything that we covered thus far?
Under sneaky stuff, subscription.
Subscription. I actually had that written down.
Yeah.
Yeah, how many things do you have that you don't use anymore, like Paramount Plus or, you know? Yeah, you got it.
Just you put it in
Oh.
the-
At the bin Yellowstone and then all of a sudden,
Oh,
Well, yeah,
that was worth it.
it was until the later seasons.
I believe it.
They jumped in. But yeah, subscriptions are a good one to pay attention.
Yeah.
Pushing up me, they're-
Walk around.
The Netflix.
Oh,
Like,
did you
every
get?
time I click on it, I have to like call my mom, be like, let me in, cause she's.
Oh, no.
Oh, yeah.
Update my household.
Oh, that's hilarious.
I don't know how long she'll allow
Yeah, just-
that.
I met with my cable, my stepdaughter was at school in Nebraska and I get a call at like 11:30 at night. She's like, oh, did you get it? I'm like, what's going on? She's like, I just needed to watch Love Is Blind or whatever. And I'm like, yeah, here it is. No worries. I didn't know you still had that. That's awesome. I mean, it's about time you got your own cable.
Right?
That's okay. Awesome. So we'll go to the next one on that one. So obviously we've kind of talked about a lot of this stuff on how it impacts that, but you know, the main ones, right? Credit use credit, even those folks who, right, are being responsible, paying everything in cash, just put it on credit first and then pay it off like that, right? Just get in that. That's what I would advise people as they're, especially first time home buyers, right? Who need to build credit, utilizing credit, building a credit history. That's the key there. Obviously, budgeting is going to help them feel comfortable on what they're spending versus what they have to pay every month, right? You know what your expenses are. It's not going to be a surprise when you get to the end of the month and your credit card bill is X, right? Ideally, don't pay interest just because, you know, don't give somebody money you don't have to, right? I always look at like bad debt versus good debt. Housing debt is good debt. Consumer debt necessarily isn't. So that's the thing there. Capacity, same thing with budget, right? You understand what your revenue is coming in, and your income's gonna come in. You know what your expenses are. All right, now you have a good concept of what you actually can budget monthly. I talk to everybody when I talk to them, what's a comfortable monthly payment as you go through there, because as you'll see when we go into what the lender kind of pays attention to, what I can qualify you for is not necessarily what you're comfortable with on your budget, right? If you're paying attention to your budget, you know what you can allot to your house, right? You know, if it's a stretch, should I go look at that $300,000 house or can I look at a $500,000 house or what, right? You'll have that comfortable understanding of that. Also, income, if they're paying attention to their income, they know what the next like raise that they're gonna get. They know maybe some side hustle that I don't care about from a lending perspective, but they've got cash coming in, so that maybe they're comfortable with a little bit higher payment, right? And that's just a way that they can feel comfortable with their own personal ability to cover the payment. And then cash, obviously. Income minus expenses, that's your cash. That's what you have left over. That's what you get to build your cushion for, paying off bad debt, starting a business, retiring, buying a house, buying a second home, moving, paying for your kid's college, any number of those things, right? That's what this budget, if you pay attention to this, they can achieve those types of things. And I think that's kind of powerful on that, where you can talk them through, here's how we get you to those things, if that's what you want to do, right? So yeah, that's kind of the impacts that I saw the budgeting standpoint. I don't know if you guys have any questions, thoughts, anything like that? Or feelings on that?
For my friends, one of the biggest thing is like, what are their monthly subscriptions? And like things that they don't know that they're paying an extra $200, $300, $400 a month that they don't realize.
Right.
And also like habits like Uber Eats and DoorDash.
At certain times of the night. Of the
Well,
year.
it's like you can do that 3 or 4 times a week and spend a lot of money.
My other stepdaughter, she got into Chick-fil-A and giving it DoorDash to the high school. And all of a sudden, she had her mother's credit card, and she racked up like, I think it was like $3,000 or something like that.
I believe
Not
that.
hard.
And it might have been higher, and I just shut off my ears at that point because I was like, well, I'm not paying that, so that's fine. But yeah, she's like, oops, I didn't know. Like, she just got in him. She loved Chick-fil-A, hated the school lunch. DoorDash would come to the high school. So she did that.
Oopsie.
Oh, God bless Sophie. But that was, yeah, it was funny. I'm like, those are things she would pay attention to, right?
Really?
Awesome. All right, so I think, yeah, next step.
I would be minus a kid after something like that.
She's a lot nicer than I am.
I'll get one.
Um,
Just saying.
So the next thing that I thought I'd go into is from a lender's perspective.
No, really, like, we're all like. what are we doing?
I know, I should never.
Yeah, we're-
It was a bad place to transition, right? 'Cause
If
if you're a kibosh out
All you
there,
need is
you
people
cannot
wrapping
do
to
that.
show.
Same with my kids.
Oh, they can free and cheap.
Also, like,
I'll let you know next time.
security purposes.
Right,
Yeah.
I get so afraid of human.
I know, she would just run out and meet up, and go, like.
My students.
Is that what they? So annoying.
Starbucks.
Oh. Anyway, the whole other thing. That could bring a whole conversation, right? So I thought we
Yeah.
could go into kind of from a lender, what does a lender care about in these same
Oh,
kind
geez.
of areas, right? So from an income standpoint, we really just deal in qualified income, things that we can document, we can show as recurring on that. So if you started a business last week and you're earning tons of cash, we can't use that. We have to document it. Any self-employed income is over 2 years, so that's not qualified income, right? That's real income that you can use towards just building your budget. Other thing, as a lender, we care about gross income. We don't care about the net, right? We don't care what actually hits your monthly bank statement. We care about, so we use, like, say your salary is $100,000, we use $100,000, we divide that by 12. So your monthly salary is that. We take that, multiply by 45%, that's what you can afford, right? That can be very different than what you actually have in your bank account and your real thing. So that's where knowing that is, right? And that's where I say that too, is we can qualify you for maybe a lot more than you're comfortable with paying. And I've always said, I never want to put somebody in a situation where they're house poor, right? Want to make sure that they're aware of what that payment is versus what we can do, right? And like I said, we can do a lot of things. It's 45% is kind of where I start, but we can go a lot higher. We've gone to 50, 55% depending on the product, depending on the compensating factors. Not necessarily the right thing. Sometimes it is, right? Sometimes there's more income that we're not aware of that we can't use, and it's fine. And that's where they justify it, right? Another thing with gross, they use gross because they don't take into consideration tax implications or what you spend on other stuff, that type of thing. So that's from an income standpoint, that's what we care about. Same thing, like, so debts, there's other things that we care about. We don't care about everything that goes out on a credit card like that. It's really 2 things that we care about: installment debt and revolving debt. Installment debt is anytime you borrow a large sum of money and you pay it back in a specified period of time. Car loan, student loan, personal loan, boat loan, that type of thing. That's an installment debt. We use those in the calculation. The other side of that is revolving debt. That's where you have a line. You're allowed to borrow up to that. You can pay it off, borrow up to it, pay it off. That's a credit card, personal line of credit, home equity line of credit, that type of thing. Those are the two types. Like I said, we don't care. We only use the minimum payment on that. So if you carry over a balance every month, but the minimum is, 5% of that, that's fine. I don't care we don't care how much they pay every month. That doesn't factor into the calculation that we. So that's really that. And then, like I said, with the debt to income, that's how we come up with that. It's gross income times 45%. That's where I start. And then take out any of those minimum payments for the revolving debt, any installment debt. What's left over is the payment, principal and interest, property taxes, insurance, mortgage insurance. That's what they qualify. So that's kind of what does that make sense? Do you have any questions or thoughts on that? And then the next thing, cash to close, that's actually really the simplest thing for us, because there's a ton of different options. There's as little as 3% down on that. There's some 0% down programs depending, veterans, USDA rural type situations just outside of the metro. Those are 0% down. Those are great ones. There are also down payment assistance programs that allow you to put as little as $1,000 only into it. You can get gifts from relatives, from even your employer. So there's a lot of ways. What we always kind of say is if you've got the credit and the income, we can figure out the third, right? If you have two of those three, we can figure out the other one. Down payment is way we can figure out a way to make that happen on that. So that kind of what I have. Questions?
They just rolling out the first generation.
Yeah.
Down payment. Do you know when that is officially going to?
We heard spring. Ben, did you get back from Caesar that when it actually is coming out?
I don't think they pinpointed an exact date, right, but I think there's gonna be a couple parallel programs right now we're trying to sort through, because there's another one coming out, it's another like 32,000. And I know specifically in St. Louis Park, there's another one that's another 15,000 as well, that you can couple on top of that first generation one with Minnesota Housing. So I mean, you'd be looking at $50,000-$60,000 for first generation people, and yeah, it's pretty great program.
They're allowing us to market it, so that's, I would say, a good sign.
Yeah.
Usually, that means it's more imminent than not. So as soon as it comes, don't worry, I'm sure you'll see everybody and their mother putting it out there. So,
Yeah.
other last questions?
And yeah, I know some cities offer different down payment assistance programs, so different, are you guys aware pretty much?
Yeah, we can.
And I know some of those run out, like.
Right.
Yeah.
The cities will put X amount of dollars out there and they use it till it's gone, and then they refund it the next year if it's approved, that type of thing. Every city, every county, everybody has a little bit different thing on that. What I tell people is like, when you're looking in an area, let's go out and look at some of those things, see what happens. Sometimes you'll see it advertising on listings. They'll mention it. I know when we had one that looked like that, it was like, let's go. So I called the listing agent and said, what is it? And she was like, I'm glad you called. And she went through this whole thing, and it was amazing if it fits the right criteria, right? Didn't fit our borrower, but there's a lot out there. So it's just, you have people looking in specific areas, quick Google search, and we can do any type of down payment assistance or any type of that. And engage me. I will help you research it and figure it out for sure.
And another one's like, what, $2,500 grant program, we just rolled out as well, and we got some other random like dream program. I mean, there's a lot of things, but that's the thing where it's just sifting through and figuring out like what's somebody's goal, and then figuring out how to match that up, right? I think that's always the big thing is what are your goals, and then you just piece it together,
Yeah, that's key.
But yeah.
One thing we were talking about, just the other day with, the one, potential borrower is her property in Florida.
Yep. You can use rental income on some stuff, and
And you don't necessarily have to wait a year or two to use it.
you don't have to have history of it on that. If you have the equity position in a property that you're leaving and a lease, you can use it. You can also use it on a new property if it's an investment property. You can use rental income. So there's different ways to access income that they haven't realized yet, but we can use it on that one. So it's really, there's so many different scenarios, right? It's just talk it through with folks and what they've got going on. That's where that self-educating that folks try to do, they might miss a lot of the opportunities out there. And that's where, as professionals, we can come in and go, let's have a conversation and go through it, some different areas.
I've even heard that from other lenders saying, oh, no, you can't use that until you can show it on your taxes for 1 year or 2 years. So.
There's options. Yeah, for sure. So it's all certain circumstances, right? It has to fit, but there are options.
But then also like certain lenders have different overlays,
Yeah.
right? So we go directly to Fannie and Freddie, so we don't have.
If
like-
they allow it,
yeah.
we do it. And if they don't allow it, we've got other avenues, right?
Yeah.
I mean, we've got some other stuff too, so. Other thoughts, questions, ideas? That's all I got, folks, so thank you. Please, yeah, come by the Leap Day celebration tomorrow, 6 till whenever, should be a good time, I know Chris is.
Who's going? I
Not
can-
put you on the spot. Candy's also said she's gonna come.
I have to look at the time, but
Oh, that was a quick, I gotta look at the phone.
Hi, girls.
So excited and
I am really excited.
Told her she needs to get a little lubricated before.
bring them with.
Yeah.
She's good at it. I'm like, are you-
Oh, really?
Come on in. we'll have
Yeah,
that
free
special.
game.
I know, we
You'll
just
feel-
put it on
You'll
the,
feel much. Did we get it? $2.90.
we'll see. I
No,
might be able to
please
do
do come.
Oh, but.
That'd be awesome. Thanks, guys. Appreciate it.
Shit, like, just like